Well, Bank of Baroda posted a decent set of quarter two numbers. When you look at net interest income, the number has gone up by around 2.1% on a year-on-year basis to 7,550 plus crores. This is largely driven by a degrowth in the interest income, which is a top line. When you look at PPOP, PPOP2 has grown around 5.76% or so to the 5,670 crore mark. That clearly signifying that operationally the bank has done better. However, PAT jumped around 24 plus percent, and that is largely driven by the improved asset quality and lower provisions. Even when you look at the half-yearly PAT, the half-yearly PAT has quadrupled versus last year. So a strong set of numbers with regard to the bottom line. And talking about asset quality, GNPA has come down to 8.11% versus 8.86% on a quarter-on-quarter basis. That's a 75 basis point improvement. We saw that even in SBI, we are seeing that even in Bank of Baroda. When you look at the net NPAs as well, it's come at 2.83%. That also is a 20 basis point improvement versus Q1 of FY22. And NIMs have come in at 2.85% versus 3.04%. So that's a bit of a hit on the NIMs. However, a 2.85% is what the NIMs stand at. When you look at the balance sheet, total deposits grew around just over 0.5% and global advances grew around just above 2% on a year-on-year basis. Capital adequacy jumped 229 bips to around 15.55. That's a strong capital adequacy for piloting growth in the quarters going forward. ROAs jumped a strong 14 basis points to around 0.73%, and CASA grew 13% on a year-on-year basis. So strong numbers across the board on the balance sheet and the ROA side of things. When you look at what the management commentary or what the management expects, management continues to expect growth momentum led by retail. It expects the disciplined approach which has worked for the bank in quarter one and quarter two to continue over the longer run and continue to aid the bank, and it expects credit costs to come down in the range of around 1.5 to 2%. That is what the bank is guided in any case. So that's where it expects credit costs to stand at. Now mind you, the stock fell almost 5%, in fact 4.5% in trade yesterday. So it's at around 101 a piece, and houses like Motilal and JP Morgan both have a buy rating and an overweight rating respectively on the stock. Motilal expects the stock to have a price of around 130, so target price 130 for Motilal. That's a good almost 30% upside. Bank of Baroda reported a strong performance as per Motilal, and that's supported by lower provisions and higher income. NII obviously continued to remain under pressure. We did speak about that. The Motilal also believes that business trends have improved with advances growing 4% sequentially, and both corporate and retail looking better when you look at it sequentially. The corporate book, according to Motilal, continues to see a gradual recovery with overall asset quality improvement as well as collection efficiency improved, and SMA 1 and 2 have declined to 1.87% of loans. That also is a big positive according to Motilal. When you look at how JP looks at it, JP Morgan expects the target price to be at 120 with an overweight rating. It sees that Q2 net income is ahead of estimates driven by lower provisions. It believes that core PPOP was impacted due to one-time issues, and core PPOP has been impacted largely due to family pension and interest reversal on the share exposure. Now that should go away hopefully in Q3. And total restructuring is around 2.8%, increased marginally by 11 bips, but still that's a big positive according to JP Morgan. And when you look at it overall, JP Morgan believes that that's a good print on asset quality as well as on growth. It expects the full year slippage guidance to be maintained at around 2% of FY22, and that's what it is. So largely consensus view is that a 20 to 30% upside expected in Bank of Baroda and a very decent quarter set of numbers in Q2 of FY22.